What is happening, YouTube? It's Matt Faircloth. Welcome to the Mentorship Monday program. As I said, my name is Matt Faircloth. My company is called the DeRosa Group, and you guys can hear more about us at DeRosaGroup.com, DEROSA Group.com. Bring on our first guest. What is going on, Duane?
Hey, Matt. How's it going?
I'm great, man. I'm great.
Good.
What can I do for you? How can I help you today?
Okay. So I'm a young investor here doing it in the Trenton and the Ewing markets.
All right.
I have a duplex that I purchased
Okay.
about 6 months ago, and the duplex is on a big lot, right? And
Okay.
it's a bunch of dead space. So as you know, Ewing can be extremely difficult with zoning and permits and all of that, as you know.
Tell me about it, man. Oh my God. Yeah.
Crazy enough, I'm approved to add on to this structure or this lot, this parcel, right?
All right.
So at this point now, I'm approved to add on at least 3 units, right? So I have an architect, and we're looking to add on three bedroom units, right? So I'm looking to convert this duplex into a 5-unit, right? And that can be pretty cool, you know, based on the valuation of a 5-unit opposed to a duplex, right?
Sure.
So I'm kind of just trying to figure out if I'm analyzing this correct based on the numbers that I kind of have in the infancy stages with respect to the NOI, the cap rates, the additional taxes, and everything that's going to change drastically once I change this unit to a 2 to a 5.
Well, Ewing will get you, brother.
Yes.
Ewing's going to get you, man.
I know.
I'm just letting you know.
Sure, I know.
Their tax assessor is no joke in Ewing, man.
I live in Ewing. I know.
Yeah.
So the most they could do for me now was just give me a rough tax amount based on the acquisition of the new home or the new modular or the stick built, whatever I built on this structure. And they just hit me with, okay, if you're at 200 grand for everything, we're going to multiply that times the tax rate of 3.45 whatever percent or something like that. So they couldn't really give me a lot of actual like concrete numbers with respect to taxes, but I know that's just one of the things that I have to take into account for. I know there can be quite a few with respect.
That's not the end of the world.
Yeah, exactly.
So they're going to base it off of, let's talk through each thing. They're going to base your real estate taxes based on cost of construction, not new valuation, correct?
Correct. Yes.
Good.
Yes, very good.
If they were going to do new valuation, then they're going to come in and try and comp you to a 5-unit that's somewhere else in Ewing, and they're going to come and throw an NOI at you and everything like that.
Yes.
And that's where you're going to like,
why did I do that?
200 grand times 0.3 times the 0.03 mill rate that you're talking about.
Yes.
You're like 6,000 a year. Right?
Yeah. Plus the additional 5,000 a year I'm already paying for the additional duplex.
Yeah, but that's okay.
No, I'm happy. No. I kind of ballparked it at about 13 to 14,000.
Yeah. Roughly, okay. You know well, hey, that's a savings then if you get that. All right.
Sure,
all right.
So right now, just to get into this, I know you're a numbers guy. Right now, I have a duplex that rents for $2,000 a month. I'm trying to add 3. We are approved for the 3 units, so we're trying to put 3 bedroom units, and we're looking to do about. I'm just going to pay $1,325 a unit, right? Just for math, right? So right now we're at $5,975, almost $6,000 a month gross rents, right? So 6,000 times 12, of course, is 72. So we have gross rents of 72,000 a year, right? Subtracting our expenses, which would be taxes, insurance. I property manage because I'm just beginning, but I know in the valuation, an appraisal can take out 7% or 10% for property management. Vacancy, there can be a plethora of things that's going to, of course, eat at that gross rent to give you your NOI. So I'm right now at about, I think the last time I ran it conservatively, we're just taking off like 20 to 22,000. I kind of really don't know. So if we say 20 for simple math, right?
Off expenses.
Off expenses. If we say 72 minus 20, we're at $52K a year, divided by a cap rate of 10, maybe a 10 in Ewing. It's very close to Trenton.
No, come on, man.
No, that's what. Okay.
Ewing's a whole nother world, man.
Yeah.
Ewing's not Trenton. And I got somebody that I'm talking to buying in Trenton right now. They're trying to buy on a 9 cap. Right. So you're discounting yourself too much by hitting yourself with a 10. A 10 cap's like Beirut, man. I mean, like, well,
I'm very close to Trenton. Literally, this street, Matt, is right on this street is half of the street's Ewing, and on the other
what street's it at? Where you at?
Ingham, West Ingham Avenue.
I know, yeah. Okay.
Yeah,
I owned the buildings. My YouTube channel did a big it blew up on this video I shot on Concord Avenue because I used to have a bunch of them on Concord.
Yeah, that building's for sale now. I think.
I know.
Yeah, that's a 20 unit. I've been looking at it.
I know the guy that owns that place, and he's told me bring him an offer, just so you know.
Wow. Okay. Cool,
so if we can talk offline about that one. That's 20 doors if you want to, you know.
I remember. I remember when you were closing. I seen the YouTube video. I think when you were going to closing to sell off those.
Yeah.
No,
so
that's good, Matt. If you're saying I'm at potentially a 9 cap, right? If 10,
you're an 8. You are an 8 all day long. You are at a 7.5 or an 8 cap all day long, right there. New construction, man. Come on, you're kidding me. Yeah. New construction. You're in Ewing, but forget it. Yeah.
Okay. Well, it'll be partial new construct because the valuation I'm looking to will be the entire parcel, right? So it'd be all 5 units. So the
rising tide raises all boats, though, man. Because anybody that values that property is going to look at the whole thing all together.
Great.
So,
great, cool. That's good.
But I gotta. So I'm pumping you up, man. But I gotta take the weight out of a little bit.
Go ahead.
20 grand is nowhere near not enough for your expenses.
Okay.
The bad news is your expenses are too high or not high enough, and we'll get into that. The good news is that your rents are too low. That at third, I mean, when I owned the Concords, man, I was getting 11 for a 2-bedroom, like an 800 square foot 2-bedroom. My guess is that if you're building new construction 3 bedrooms under today's codes, you're probably 1,500 square a unit, right?
I was being conservative, but that's good news.
Am I right on square footage?
What's that? I didn't hear you.
1,400 square foot.
No, Matt. I was trying to be at about under $3,000. 3,000 square feet for the entire building. So about 1,000 square foot a unit, based on the preliminary.
You're gonna build a 3-bedroom you're gonna build a 3-bedroom 1-bath at 1,000 foot.
Yes.
Right.
That is the preliminary.
All right. Okay. All right. I'll back up a little bit. Because you could probably push to 15.
Okay.
On rents, but yes, Joe, that is the package. Look, it's on LoopNet. If you guys are interested, I can get you more information on it. And that's just email me at info@DeRosaGroup.com. And that, so because the seller's, he's a friend of mine. He's just looking to sell. Let's just run with your number, right?
Okay.
The 1,350, which is 6,000. Okay.
Yes.
Like you said, 72. Okay.
Yes.
$72,000. Okay. That is a Class C asset, Concords, all day long. So 72. First thing you got to ding yourself on here is vacancy, right? So we're gonna. I'm gonna hit you for 5%. Okay. Vacancy. All right. So that's 36. Yep. That's 3,600. Okay. Then I'm gonna take out the biggest thing you can do for yourself on construction is insulate those units really well. To do higher end energy insulation, and if you can, design in a water meter system where the tenants pay their own water.
Yes, that's already.
So you have zilcho utility.
Exactly, definitely. Right. I'm not sure if there'll be a common area depending on the overall layout, but that was one thing I made sure I pointed out to the modular guy, and he said yes, that can be done.
I use a modular.
Preliminary, we're at about $80 to $90 a square foot finish. Those are pretty good numbers, right? So
I want that guy's number.
Okay, I'll send it to you. Well, who knows? That may change, but that's the preliminary number.
I'm trying to build a bunch of townhouses not too far from there.
Okay, really?
And I can't get numbers below $120 a square foot.
Yes.
Now for modulars, for stick frame.
Yep. He said modulars are a little cheaper, so he told me 80 to 90. I kind of went in. Okay, that's probably going to be 100. Because we'll see.
Yeah. Well, you got to do. The problem is you got to do your site prep, right? Yes. For modular. He's factoring in getting you the boxes from the factory, craning them in, mating them together, and calling it good, right? Exactly. You got to factor in your cost for digging a hole in the ground, for pouring it full of concrete, for putting the utilities into the connections and everything that. Exactly. Yeah, man. So anyway, I digress. But hey, it's a good conversation. So going back to your numbers, 72,000, 3,600 for vacancy, right? I'm going to throw in insurance. Now I'm probably going to hit you because it's new construction and everything like that. Probably 500 a door, maybe.
I kind of thought about
1,500.
25. Yeah, 2,500. Okay, so that's 20. Okay, that's good.
You were 25? All right.
I kind of went anywhere from $25 to $3,000 roughly.
The biggest thing that people miss in small multi like this is the cost to turn an apartment. Joe Smith's going to be living there. He's living there for a couple of years or for a year or so, and he's going to move out. You're probably going to turn about 30% of your units a year, which means you're probably going to have about 1.5 move outs per year, even on new construction. And you're still going to have to, dress it up and return it.
Sure.
And I think it's going to cost you, let's just say high side, I don't know, another $1,500. I'm going to ding you, man. I'm going to hit you
$2,000 easy.
I'm going to say $2,000. I'm going to come at you for $2,000. Right? $2,000 for turns.
Okay.
And God willing, and the creek don't rise, that you can only have to turn one a year for that. Right?
Yeah.
Are these units going to have a common area, or is it going to be townhouses with private access?
Townhouses with private access.
I like it. Okay, good. Maintenance, because you've got to maintain an old duplex and then 3 new construction doors. I'm coming at you a lot higher now. You're going to pay $5,000 in maintenance.
Okay.
And turns, that's $2,000. I'll let you keep that number, my friend. You get to keep that. And then you're going to have to pay water on the duplex.
Yes.
Right.
Which is that's pretty good. Those tenants, it's about $150 a quarter. So that's pretty.
So $600. Now Joe is reading my mind, and he's throwing out there about common area utilities. Even though you're going to try and design this out, you're going to have an electric bill somewhere. I promise you. Even if it's the basement or the duplex or whatever it is, that's going to cost you about probably $50 a month. So that's going to hit you about another $600. So I'm going to come at you at $1,200 all in for utilities. Now, the reason why you have to pay management, and you're like, I manage it myself. What are you talking about? You are, but any bank that values that deal and any appraiser that values that deal is going to put in management. And the reason why they're going to do this is, God forbid, they got to take this property back from you. They're not going to manage themselves.
No, sure.
You're managing yourself, but they ain't going to do that. Okay.
So that's going to be 10%, anywhere from 7 to 10%.
10 on this size asset, 10 underwrite. I mean, I got a cheaper manager than that, but underwrite that at 10%. Right. That, my friend, is $7,200. Boom. Tell him what he's won. Taxes, you said. I'll go 13.
Yeah, 13 is fair, please. That's fair.
I think it's high, but I think you can get it done for less than that. And I would even lawyer up if you don't, if it's CapEx for older units. Thank you, Adrian. I probably would throw in the new construction. You're going to be good to go for a while. You're going to have a warranty from the manufacturer on this.
10-year warranty. Yep.
Yeah. It's a 2 and 10. So I probably would throw $400 in CapEx, maybe at the buy. Let's just call it $1,000 a year. And capital expense reserves. And the best thing you can do to reduce that a little bit, Duane, is when you go and redo this property, throw a few dollars at the duplex. If the duplex's roof is more than 10 years old, replace it. If the windows are old-ish, replace them. If the furnace that heats both those units is the duplex all separate utilities?
Yes, duplex is all separate utilities. Okay. And a new.
So look at the heating units.
When I close. Yep.
The biggest thing that's going to cause the biggest price tags on rental properties are 3 things: roof, windows, HVAC.
Okay.
Right. Aside from capital improvement upgrades like new kitchens, things like that. The biggest things that can cost you a big nickel and are not going to add value to the property, like a new kitchen. Be like, well, what about new kitchens? Yes, but that's value add, right?
Sure.
A new heater, a new furnace is not value add. Okay, let's add all this up. 72,000. Right. I just came at you, didn't I? Let's see. All right. So I'm at 3,600 for vacancy. I'm at 2,500 for insurance. I'm at, again, this is where it takes to get real to run the numbers on a new construction project, right? I threw another $2,000 at you for unit turns. I threw another $1,200 at you for water. $7,200. Tell him what he's won for management, and then real estate taxes. The king. Welcome to New Jersey. There it is, 13,000. You are magically exactly where I thought you were going to be. You're at a 50% expense ratio. When you said $2,000 at 20 grand, I was about to say, let's just bottom line it and go 30 and go 50%. No. Okay. You're at 34.50.
30,
so
I was 34.3 or something like that.
Yeah, minus 7,200. Okay. So 72,000 minus 34,500. So you are at a NOI of 37,500. Now divide that by a cap rate of I think you're at 0.08. You are at a whopping 468,000 in valuation. Now I think you told me it's going to cost you 200 grand to build the property, right?
Well, about 200 to 250, depending.
That's fine.
Yeah,
What'd you pay for the duplex?
125. I have 90K debt in that duplex right now.
Oh, dude.
Mm-hmm.
How about you make 120,000?
Yeah, that's what I thought, man. I thought it.
You thought it was gonna be more. You thought it was gonna be less than that.
Yeah.
You were over simple.
I was at a 10
you were
cap.
over conservatizing yourself.
Yes.
Selling yourself short, Duane.
Sure.
Selling
Exactly.
yourself short with a
But that works. 468. That works, man. That like works very well, right?
That's all go hunt, right? But carrying costs, hard money. How you financing this thing?
But I do have a private lender who said I have to go through a few more steps, submit a bunch of drawings, and do things in a different manner. But they are interested in funding the deal.
Mm-hmm. Okay.
Yeah.
Okay. Good. If people want to talk to you about building, people want to talk to you about Mercer County, New Jersey, Trenton, that whole area, how do folks get a hold of you?
Primarily Instagram. I'm on Instagram. My name is one rental at a time NJ. It's _rental _ at a time, pretty much underscore in between each word at a time New Jersey. There's only me and another person with that name. So
one rental at a time NJ. All right.
Yep, correct.
Cool. Get a hold of Duane on Instagram, guys. Send him a private message. Pick his brain about new construction. Pick his brain about New Jersey. Good stuff. That's what we got today, guys. Do you guys want to submit a question to help me at DeRosaGroup.com and want to join our insiders community too? Don't forget, those that submit questions get a free 1-month membership to Insiders.
Great. Sounds good, man. Thanks again, man. Thank you.
Oh, thanks, Duane. Thanks for coming on the show. Guys, that was awesome. That was incredible. That was a great idea. It was a great talk about new construction, new construction cash flow, great ways to do deals for real estate. And it doesn't, what's great is that you don't have to aspire to go buy a couple 100-unit apartment complexes to be successful in this business. You can do what Duane's doing, and Duane's going to retain a lot of that asset, if not all of it himself, and do really well for himself. So I cannot wait to see where Duane ends up. Keep an eye on that guy. Hit him up on Instagram. We've got his Instagram handle right here on the Facebook feed too. That's what I've got for you today, guys. Thanks for watching and have a great and profitable week.